What's up? Hey, everybody. I hope hope I'm not on mute. Welcome to today's analysis. So today I'll be sharing a topic that I came up with last evening when I was looking at different ways I look at the markets. And then I was looking at a few, if you read the poster that I shared, I was talking about, what did I write on it? Let me check. Yeah, so I wrote time frame disparity, drawing and anticipating patterns, and trading consistent trade setups. Okay, so the time frame disparity, something I noticed when I was analyzing the markets. It's something we've always noticed. It's not new. We've always known about it, but I want to share with you guys so that you can understand and how it affects different candlesticks and different patterns. So I really want to touch on that. I think this is now a deeper stuff that we normally get into that you're not shown on books, but practically it's very different. So I want to touch on that. Drawing and anticipating patterns. I remember this, a student of mine asked me that they tend to see patterns after they've already formed. How can you notice a pattern is forming when it's forming? So it's not an easy thing. It's quite a hard thing. It's not easy to see a pattern forming. So it needs practice, a lot of practicals, okay? So I'll show you how to anticipate that, different patterns, and then trading consistent setups. And then also had a bonus that I wanted to share with you guys. I just want to give you as much as I know, let me just share it. Knowledge is to be shared. I don't go to the coffin with everything I know. So I'll share with you guys. But I hope you're well. If you have any questions, ask in the chat room after my presentation and after I go through the charts, which is quite in-depth. I really want to cover some in-depth stuff that I've really been looking at. So in the meantime, if you have any questions, be sure to ask me in the chat room. And after this, I'll answer your questions towards the end. If you've been with us, you know the drill, you know how we normally do. This time I don't have a short time frame, so we can take about an hour or an hour, 15 minutes. Let's say by 9:10, we'll be finished, okay? Awesome. So I have a lot to share. So let me get into the charts so that I also don't waste much of your time. It's evening and most everyone at this time is quite tired, I can imagine. So let me share my screen. Okay. There we go. Cool. So I had quite a couple of stuff that I have here that I want to share with you. So in a nutshell, this is my Notion. I use Notion for many things. But in a nutshell, I was just writing a few notes, edited about an hour ago, and just looking at what I want to share with you guys, okay? So some things I want to look at, basic chart analysis. Let's not really say it's basic. It's a bit more in-depth. If it was basic, it's like looking at what is a candlestick, what are chart patterns, what's a trend line. No. That's not what I want to look at today. Today, let's get a bit deeper into a few things that people don't really pay a lot of attention to. So I want to look at chart frame disparity. This, to some of you, this might be new, but it's very, very important. Different brokers showing different time frames, which can cause patterns to look different, candlesticks to look different. So I want to look at that. I also want to cover time zones change twice a year, March and November, give you the reason why and why it's important to pay attention to when the markets are changing time frame. Okay. And then 2, I want to get into how to anticipate and draw patterns. This is not I won't give an ultimate law. I won't give like a absolute one way of how to do things. There are many ways you can do things, but I want to cover, as a rule of thumb, what you can be looking at, the basic ABC pattern, flags, trend lines, triangles, key levels. I want to cover a bit of that, okay? And then note timeframes can discount a pattern. I'll also get into that. This is just like a content review, what we're going to cover. And then having a consistent playbook, backtesting your trade setups, importance of trading one setup to perfection. So I also want to cover that. And then I'll finish with this sort of a bonus, important plays in the market. So these are things that I've noticed along as I was trading, as I was looking at the markets, successful follow-throughs and failed follow-throughs. So I want to cover a bit of that also. Basically breakouts and false breakouts. I'll do it within the hour, I'll be done. A lot of important information that you can gather a lot from here and go, like I like saying, whenever we give information, go and add on top of it, go put more content and understand it more than what I'll teach here. Okay, cool. So let's start with the time frame disparity. So what do I mean by time frame disparity? If you look at my market, or rather my screen, I have shared multiple different candlesticks on my, not candlesticks rather, but different markets over there on my right. Okay, so the reason being, I want to show you some disparity that is normally in the market, especially when it comes to the 4-hour chart. Okay, so time frame disparity using different brokers. So we tend to use different brokers. For example, if I search Aussie dollar, I can get Aussie dollar. If I click on it, you can see this is Aussie dollar by Oanda. Okay, if I click on this other one, this is Aussie dollar by FXCM. If I click on this other one, this is Aussie dollar by Paperstone. Okay, if I go to this others, USD card, if I search there, you see USD card by FXCM. If I search here, another one, Paperstone, USD card by Oanda. Okay, so different candlesticks, different. Even if I just search here, let's look Euro USD. You're going to see here. So different people will choose different depending on, I don't know how people choose this criteria. I'm sure even most people don't know. They just search Euro USD and press enter. But the thing is, there's Euro USD by FXCM, there's Oanda, there's forex.com, there's Paperstone, there's ICE, 8cap, Capital, Saxo, Global. It goes on and on and on. Okay. But the thing is, they're different in a different way. So that's what I want to cover. Okay, so far, if you look at this now, what do I mean by they're different and why you should pay attention to them? Okay, now look at this. For the first Aussie dollar USD card, what I'm looking at is the time frame, especially when you go to the 4-hour daily chart and so on. If you look at the 1 hour, it's almost the same because every candlestick closes after 1 hour. Okay, if I click here, every candlestick here has a time frame of 46 minutes remaining because now is 8:13. Okay, so 46 minutes remaining for the time to end. But if you come to the 4-hour now, there's something that starts changing. Okay, so pay attention to this. This is quite advanced, quite deep. Okay, if you look at here, you have 3 hours 46 minutes. Okay, if I come here, I have 3 hours 46 minutes. If I come to this other broker, 3 hours 46 minutes, 45 now. Okay, so these three are almost the same. Okay, if I come to USD card, if I'm using FXCM, I have 3 hours 45 minutes remaining. If I come to Paperstone, I have 3 hours 44 minutes remaining. And over here, I have 3 hours and 45 minutes remaining. Okay, so a little bit of disparity. Over here, there's 45, and over here, we have 44. Not a really big difference, it's just a 1 minute difference. Now, look at this. It gets deeper. Look at gold. Okay, so when you're looking at gold, look at gold. How many minutes remaining for this candlestick to close? 45 minutes. Okay. Now this is Paperstone. When you're using Paperstone as a broker, if you come to here, this is TVC. You have 45 minutes remaining. So the first one and the second one more or less look the same. Okay. But look at this third one. You have 3 hours 45 minutes remaining. Okay. And this is Oanda. So now there's a difference. There's something that's cooking up. You're like, okay, now what's happening here? Because look at this. If you look at this pattern, which I'll get deep into later on, to part of my presentation, this is the Oanda one. Look at this candlestick here. For many people, this is maybe not even a sell signal. Okay, you won't even enter short. You're looking at this, maybe you're still anticipating markets to keep moving higher. But if you come to this is Oanda. Now, if you come to something like Paperstone, look at that. Look at that. You see that big difference? Okay, they have a 1 hour difference. Okay, a 1 hour disparity. That's what I call disparity. There's a big difference depending. And this, I noticed this when we used to share charts with Ken and Taras, and you're like, Taras, can I see your chart? Then you look at Taras's chart, you're asking, Taras, what's different with your chart in mind? There's a disparity. There's something different. This is very important because it can alter you to make different decisions, because depending on how you've been trained, depending on how you know how to analyze the markets, such a candlestick calls for a sell signal. If you come to this other one, such a candlestick, you're still in between 50-50. Okay, let's move forward. Let's look at others. Let's look at, I think the US 100 were the same, 43 minutes remaining on this one. 43, that's quite the same. If you look at US 30, I think there's a disparity. This is currency.com, you have 43 minutes. If you come to capital.com, you have 43 minutes. This is the US 30, this is Dow Jones. But if you come to Paperstone, you have 3 hours 41 minutes. So now you're wondering, okay, which candlestick, which one should I trade? Because this one, the 4 hour candlestick has already closed. This previous one, this blue one is when the 4 hour closed. But if you come to this previous one, you can see market is closing. Look at that candlestick. Okay, it's a strong bearish candlestick which is about to close in the next 45 minutes. Okay, which if it closes like this and much more bearish, it might be calling for a bear signal. Okay, but if you look at this other one, look at this, you're not even sure. This is a strong bullish candle, so you're not sure. So you see the difference. So it's important. Look at also dollar index. Okay, dollar index, this is TVC dollar index. Then you have this one is CS, it's almost the same. These two are the same. You have 1 hour 42 minutes remaining. Here you have 1 hour 52 minutes remaining. That's a 10-minute difference, which can also cause a candlestick to look different. So I don't know where that difference comes from. But then another big difference come lower. You see this one has 2 hours remaining. A big difference. That 1 hour difference is big. So the question that begs, or the question that comes, how do I choose the best chart to look at? So there are different things that cause this to happen, okay? Different brokers are from different areas, okay? You might find the one is from the US, you find FXCM maybe from Europe, you find TVC from somewhere else, okay? So for me, what I normally do, something that also affects, before I show you what I normally do, something that affects are time zones, okay? And if you look at and that's why I wanted to cover time zones. Okay, time zones change in March and November. Okay, so as a rule of thumb, what I normally do, I normally choose the ones that look almost the same. Like if you look here, these ones like for example, I remember when I was showing you USD CAD and Aussie dollar, they are more or less the same. If I come to gold, I'm looking at paper stone. I'm seeing 41 minutes remaining. Over here, 41 minutes remaining. Then here, I'm seeing 3 hours. So more or less, I'll go with this other one. The one that most people are looking at. You want to look at a broader time frame, broader picture. People are looking at which one. Can I choose the one that people are looking at? Because you want to be looking at something that most people are paying attention to, okay? Later on, even if you look at other traders, for example, fundamental traders, they don't even pay attention to candlesticks, time frame. That's not a big deal to them, okay? In the end, the market will go, the market is going to go. But as a rule of thumb, that's what I'll do. So I'll come and eliminate these others. I'll say, okay, let me stay with Paperstone. I remove this one that has a big disparity from the others, okay? It's on its own. You want to stick with the one that has major people. So I'll remove that and remove this one. I come to US 100. I'm looking at currency.com. And I'm looking at capital.com. I'm seeing they're more or less the same. Maybe I'll go with currency.com. I remove this other one. US 30. Of course, I'm looking at this currency.com. Then I'm looking at capital.com. They're more or less the same. Then this last one, which is totally different, is Paperstone. So more or less over here, you might see that I'm going with this other one, okay? Currency.com. I eliminate the others. But there's something you should pay attention to. Time zones. When time zones change, these numbers tend to change as well, okay? So this is just something I need you guys moving forward, be paying attention to, okay? Now, what are time zones change? Well, why do markets change time, and why does it happen in March and in November? So if you remember your physics, science, what we were taught in high school or primary, during different times of the year, some countries experience more day than night, and sometimes of the year, they experience more night than days. Then sometimes in the year, the days and the nights are more or less equal, okay? Here in Kenya, or countries that are normally at the equator, we tend to experience almost equal days, equal nights. Okay, you start seeing the sun setting around 6:30, going to 7, and the sun rising around 6 in the morning, going to 6:30. So you can see that throughout the year. Sometimes there's a little bit of a lag, maybe 20 minutes difference. But if you travel to other countries, you're going to see that markets really, not markets, but rather the time. Like for example, sometimes in the US you can find that the sun is setting at 9:30 at night and rising at 5 a.m., 6 a.m. So short days and longer nights, and vice versa. Sometimes you see the sun setting at 4 p.m. and rising at 6 a.m., 7. Okay, so longer nights than days. So it changes. So whenever they do that, okay, whenever the time zones are changing, when they're entering summer, like for now they're sort of going to enter summer. November is when they're entering winter, where maybe you might find that the nights are longer than the days. Now that they're entering into summer, the days are more than the nights. They change the time zones. Okay, so last week. Okay, now this is Forex Factory. Okay, this was last week. This is Forex Factory. I use it for checking my news data, or when the time zones are changing, news data releases, such stuff. I use it as my calendar. Also use Trading Economics, not as much as this one, but I like using this one, and I always filter. Okay, I don't want to teach you how to use this for now, but it's I normally come and filter. I take the high impact news, and the gray one is for the holidays. Okay. So anyway, So last week on Sunday, okay, this was Sunday, March 12th, daylight time zones changed, okay? So if you used to pay attention, if you paid attention to the New York session, when the markets open during New York, we normally have market starts at around 5:30 Kenyan time. That's their 9:30 a.m. Okay, so that's how it used to be since November until this date. Okay, but after this daylight shifting, okay, on the March of 13th, that day market moved from opening at 5:30 Kenyan time to 4:30. So markets moved 1 hour behind, but in their time that's still 9:30. They didn't move up to 8:30. Okay, so get the difference, which is important because it's important to watch when markets are opening to see how much volatility is coming into the markets. It can change your trading idea. It also affects the time that news are coming out and such stuff, okay? So that happened in the US and Canada, okay? Now, this coming Sunday, okay, the last Sunday, the Euro, Switzerland, and pound area, the Euro area, okay? That's Switzerland, the European zone, Britain, they're also going to change their time zones, okay? So starting Monday 27th, the London Open is going to move from 11 a.m. behind to 10 a.m. Okay, so these times of the year, important to pay attention to. Now, why am I mentioning that? Because that is going to affect these brokers and these times that they open. Because remember, this time is counting down from the time the daily chart opened. Okay, you can see here we have 3 hours for the day to end. 3 hours 36 minutes, which means the market is going to close time at around midnight. If you look at a different pair here, you can see, let's look for a difference. Okay, these ones are more or less the same. 5 hours. Yeah, for example, look at this dollar index. There are certain brokers that are closing at 5 hours 36 minutes. This one 5 hours 36 minutes, and another one here 3 hours 36 minutes. So you're wondering what's going on. It's because they're in different countries, okay, opening at different times. The operations start at different times. So next week, maybe after another 2 weeks, I might come and reanalyze this and show you, okay, the different time zones, how different brokers have changed their time. But it's important to pay attention to that because you've seen how greatly it affects your candlesticks. That is very important because at the very basic nature of a technical analysis, any pattern, any candlestick is how the candlestick forms, okay? Now that's important. So we'll cover that. I'll continue covering more, doing more research and help you which one to do. But as a rule of thumb, I go with the one that has the majority, the one that almost looks the same as the others, okay? I won't go with the one that's on its own. But once in a while, I tend to open the other ones and just look at them, but not really, not as much, okay? So I hope we're together on that one. That's the first thing I wanted to cover. Different brokers showing different time frames, and time zones changing twice a year, March and November, thus affecting the brokers we're using, which can greatly affect your trading idea. Okay.